Good evening, ladies and gentlemen. I hope everyone is well. Thank you for taking time to join me this evening. The topic that we will be exploring and looking at today is UK property and tax planning for Asian investors. So my name is Janet Chai, property consultant for Select Property. And together I have invited Sioni Tan, a UK tax expert from LABAIT Accounting. She will be covering the key financial considerations for overseas investors, tax insight when investing with a company structure. And then I'll take over from her and continue on with how to invest in UK property, the current hotspot in the UK, and lastly, I'll be sharing the current property investment opportunity in Manchester, 1 Port Street. So over to you now, Sioni.
Good evening, everyone. My name is Sunita from LABAIT Accounting. I'm very happy has been invited by Malaysia's LABAIT Property to present a UK property tax to you all. So I'm the USCCA qualified and the tax manager with LABAIT Accounting, and especially in the UK property tax for more than 6 years. So today we will talk about when you buy, when you let, when you sell, and when you pass away, what kind of the tax you may face. And also we have compared between individual and the company. Finally, we have a case study to show you all if the number of the stamp duty, CGT, income tax. So let me introduce LABAIT Accounting first. LABAIT was incorporated in 2010 in the UK, and it stands for Knowledge Accounting, Interpreting and Information Technology. We are member with professional accounting body including LCCA, IFA, AAT, and partner with the various software companies such as Xero, QuickBooks, and TaxCom. We are building an environment combining the knowledge and practice. We have the language skill and the patience to understand to help client professionally and efficiently. For example, I can speak Mandarin, Cantonese, and English. One of my colleagues can speak Spanish, and one of them can speak Cantonese as well. So LABAIT aim to benefit you by acting on our commitments, informing you about your duty, increasing your tax efficiencies, supporting you with one-stop service. So for example, if you want the company service, we can provide you the company account service, corporation tax service, PAYE, and VAT service. So let me start. What happens when you buy as an individual? So you will need to pay for stamp duty, land tax when your property completed. So it starts from 0% if the property under £250,000. If over £250,000, between £250,000 to £925,000, if 5%, and the rest is 10% and 12%. And if you have only single property in the worldwide, then you can apply for standard rate. However, if you already have the property in the Singapore, Malaysia, or other country, then you buy the UK property, it will consider a second property. You need to pay for additional 3% surcharge. As one thing new is, from 1st April 2021, you will need to pay for the stamp duty if you are the non-UK resident. So the overseas stamp duty rate is 2% surcharge. For example, if I'm from Malaysia, so I have a property in Malaysia already, so I buy the UK property, I will need to pay for 3% surcharge plus 2% surcharge if my property is under £250,000. So every tax rate bands will be increased 2% and 3%. If the buyer can stay in the UK more than 183 days in a year before or after the effective date, then you do not need to pay for 2% surcharge, or you can claim back if you already paid. One thing you need to remember is stamp duty will consider as a cost of purchase property. Then you can deduct it when you sell the property. So what happens when you buy the residential property as a company? For the company, if the property is letting out for the business use, so you will apply for 3% surcharge, similar with the individual who own the second property in the worldwide. So this is, you can see the table is 3%, 8%, 13%, 15%. And the most important is if the company directors is the non-UK resident, 2% stamp duty is still applied to the non-UK directors. So what happens when you let? That is income tax. So if any foreign investor rent out the property, they will become non-resident landlord. So they will receive the rental income. Then everyone will need to request complete a tax return in the UK. The UK tax year runs from 6 April to 5th April, and the deadline for submission and payment is 31st January. In 23-24 tax year, if the tax rate is 20%, 40%, 45%, is based on the net profit amount. For the non-UK resident, you will need to register 2 things. First, you need to register for self-assessments. Otherwise, you are not able to file a tax return. Second, you need to register for the non-resident scheme. Otherwise, your letting agent will deduct 20% on your money rental income and submit to HMRC on a quarterly basis. One thing is, I want to remind you all is, register with HMRC and apply for UTR number is legal requirements. Everyone who already have the non-resident landlords scheme register with non-resident landlord, it doesn't mean that like you do not need to pay for the tax. It only means that like your letting agent have received a letter from HMRC said that like you will be approved as a non-resident landlord and you will need to pay the tax by yourself. All right. So full HMRC registration will need to take up to 3 months to complete. So we will suggest that like you may need to register with HMRC 3 to 6 months before the property completions. And many people are concerned about how they can file the tax returns. As a non-UK resident, you cannot use HMRC online service, so you can use only 3 ways. First thing is submit a tax return with the paper tax form. Second, you can buy the commercial self-assessment software, which has been authorized by HMRC, and file the tax return by yourself. The third one is a range of tax professionals, such as LABAIT Accounting. We will file your tax return on your behalf. We will talk to HMRC on your behalf. We can fully handle your tax methods. It can be reduced the time consuming for you, and it can be reduced the burden for you as well, because we know what to talk to HMRC. We know what to do for you as a tax managers. So how is the tax on rental income calculated? It has been calculated based on the rental income reduced or minus the total allowance expenses. So the expenses such as the letting agent fee, service charge, ground rents, property repair and maintenance, accounting fee, and other expenses which relate to the UK property. So many people confused about the mortgage interest. So since 2021 tax year, mortgage interest can be considered as 20% tax rate, tax credits, and can be offset your tax liability. Honestly, if you are the 20% tax rate band, or your net income is not more than £37,700, your mortgage interest still can 100% to deduct. However, if your net income is more than £37,700, so you will pay for 40% tax rate band. So your mortgage interest was only considered as 20% tax credit. So it means that you still can minus the mortgage interest, but it's just less mortgage interest amount can be reduced. Regarding the personal allowance, if you are a UK resident, you stay in the UK more than 103 days, you can apply for it. But if you are the non-UK resident, it depends on your nationality and the residential status. So, for example, you're holding a passport from Singapore passport, China, Hong Kong, are not entitled to claim the personal allowance. So this is the interesting one. So if you had late filing or late payment, you will have a penalty. So if apply for late filing penalty straight away, if not, you submit the tax return by the 1st of January, it's £100 as up to 3 months. If more than 3 months, it's every day is £10. So if you have more, you have not filed the tax return on time and even longer for 1 year, so it will more than £1,000 per year. So for the late payment penalties, so it will charge for intercharge for 7.5% for offsetting tax payment. I want to bring your attention is Many people receive a penalty notice for HMRC said that, okay, I request you to file the tax return. This is £100 penalty. And the people would just pay for £100 and not file the tax return. And then HMRC send them again the penalty, say that I have not received I have received tax return, so this is a penalty again. The best way to stop the penalty is you need to file the tax return. If you not file the tax return, HMRC will continue issue a penalty to you, even you have paid. All right. So this remember one thing is HMRC want to receive your tax returns. Doesn't matter you have a tax to pay or no tax to pay. HMRC want to receive your tax return on time. So what happens when you sell? So when you sell, you need to pay for capital gain tax. Doesn't matter you gain or loss, you still need to report the gain or loss to HMRC when you sell the property. From April 2015, a non-UK resident must report to the HMRC for the sales within 30 days, but it has been extended to 60 days since 27 October 2021. It has been calculated by sales price minus the purchase price minus allowed expenses. So you can reduce the cost of purchase the property and the cost of sales the property, such as stamp duty, legal fee, accounting fee, or commission fee. The allowance, annual allowance is for CGT is 6,000 per person in the tax year 2023 and 24. It has been reduced from 6 April 2024, reduced to £3,000. Annual allowance is different with the income tax allowance. Income tax personal allowance, it depends on your nationality and the resident status, but annual allowance for the CGT is doesn't matter where you come from, what passport you're holding, everyone is applying is able to claim the allowance. So since 6 April 2019, sales of non-residential property will need to also report to HMRC. For the CGT rate for CGT rate for residential property start from 18%, the higher is 28%. All right. So we also have a many client asking a question is, will be taxed if they transfer the property to their family? The question, the answer is yes. The CGT is not only applicable when selling a property, but it also arises when selling or giving the property at the price below the market value. The sales price will be calculated based on the market price. So for example, you transfer the property to your children, your parents, your own company, the seller will still need to file the tax returns, CGT returns, and then pay for CGT. The only exempted if the property transfer between spouse or to the charity. So what happens when you pass away? So inheritance tax is a tax on the estate of someone who dies. The person who inherits the property will need to pay for inheritance tax. The inheritance tax rate is 40%. So the tax threshold for inheritance tax is £325,000. Everyone who have the property in the UK as a non-UK resident, the person who inherits your property will need to pay inheritance tax. Inheritance tax is very complicated tax. So if you're really concerned about inheritance tax, please consult with a specialist inheritance tax agent, and they will provide you a tax planning to show you how to reduce the inheritance tax. But leaving the property to your spouse is tax-free. So your surviving spouse to inherit all your property is tax-free. This is the straightforward reduce of inheritance tax. All right. So the UK property under company name. More and more investors are concerned about the UK property owned by the company. It doesn't matter non-UK company or UK company because of the tax rate. However, from 1st April 2023, the tax rate has changed. If the company profit less than £50,000, the corporation tax rate is 19%. If the company profit is more than £250,000, the corporation rate is 25%. For the company, the profits between 15,000 and 25,000, the margin relief will be applied. A slightly different between the UK company and non-UK company is a UK company will need to submit the statutory annual account and yearly confirmation to the company house. For the non-UK company, they only need to submit a corporation tax report and attach the company's certificate account to the HMRC. All the corporation tax rate for the UK and non-UK company are the same. And now coming to ATED, unknown tax on average dwelling is only applied to the UK or non-UK company holding a UK property more than £500,000. And every company will need to submit ATED report to HMRC in April each year. So if the property is letting out, the company can apply for exemptions. If the company owns the property for own use, then the company will need to pay for ATED every year based on the property value. Same as the individual income tax, they will have a late filing penalty and late payment penalty. It starts from day one, it has £100, and not more than 3 months, it another £100, and 6 months, 12 months, it will higher penalty. For the late payment penalty, it's same tax interest charge with the individual income tax. So it's 7.5% of outstanding tax. All right. So this is the mainly difference between the individual and companies. For the stamp duty land tax, the individual will calculate based on the number of the property held by the owners. So if you have more than one property, you need to pay 3% surcharge. For the company, if the tax rate is based on the different purpose of the property. So if you have letting out the property and the property is under company name, then it's start from 3% surcharge, same as individual who own the second property in the worldwide. If the property under the company name as if for own use, the fixed rate of 15% will be applied. For the income tax, it's 20%, 40%, and 45% is the most higher tax rate. For the corporation tax, the higher tax rate is 25%. The basic tax rate is 19%. So it can be seen that like corporation tax rate is lower compared to the individual income tax, is 40 and 45%. All right. So for the capital gain tax, for the individual is higher rate is 28%. The lower one is 18%. The company doesn't have the capital gain tax. It will have only its corporation tax. So when you sell or when you let out the property, you need to pay for corporation tax, the higher 25%. All right. For the ATD, it doesn't apply for individual. So it has only applied for UK company or non-UK company. Again, I explained like as before, if you're letting out the property, then you can apply for exemptions. If you're not letting out the property and the property is on use, you need to pay for the ATED based on the property value each year. All right. So here's a case study. We take one of the project of the select property. It's called One Port Street. The property value is £465,183. The annual rental income is £21,600. The mortgage interest rate for individual is 7%, and for the company 8%. This is just estimate figure, yeah. For the mortgage amount, we just estimate like £200,000. The property after 5 years is £649,197. All right. So this is just a summary of tax calculations. For the stamp duty land tax, if we have an individual on the property, we assume the buyer is a non-UK resident. We assume the buyer have more than one property. So the stamp duty land tax is £34,013. The company owned, we assume the company is letting out the property. So same the amount with the individual owned. So stamp duty land tax, the company or individual are the same. For the mortgage interest amount, as I say, 7% for the individual, company is 8%, and we borrow is £200,000. So it will show like 14,000 for individual for the mortgage interest amount, and 16,000 for the company. All right. You can see that net taxable income for under individual is £15,348. This is because we have not deduct £14,000 over mortgage interest. This amount under individual is profit before tax, excluding mortgage interest. And we calculate the tax first times 20% because it has under £15,348. it has been taxed for 20% because it's under 37,700 pounds. So after we times 20%, we deduct the mortgage interest tax credit 20%. So if 14,000 times 20% is like 3,070 pounds. So as a result, the final income tax amount is 270 pounds. It's different with the company. The company, the mortgage interest can be deducted profit before tax. So it means that I have the rental income, I deduct the mortgage interest, I deduct allowable expenses, and I get the profit before tax or loss of before tax. So it showed that like 21,600 pounds is under rental income, and I deduct 16,000 mortgage interest amount. I deduct all the other allowable expenses, like something like 20 to 30% of the rental income. So it's, as a result, it have a loss on 2,232. So as this is loss, it can carry forward to next year, and it also shows 0 on new corporation tax. For the capital tax, I sell the property. I use a sales price minus the purchase price and minus all the other expenses. The higher rate is 28%. So the lower rate for CGT is 18%. It has been hit for the higher rate. So I need to pay 32,319 pounds. For the company, remember, the company doesn't have CGT, it only have corporation tax. The higher one is 25%. The lower one is 19%. Between is marginal lift. So I use the calculations, same as things like I use the sales price minus purchase price. So, and allowable expenses. So it's as a result, it's 31,144. In this summary, it shows that like company own the property may have a tax efficiency even loss, and because the mortgage interest is 100% can be deducted. And for the individual, you need to pay the higher tax compared to the company. But I can tell you that this is only one of the example. This is not exactly suitable for everyone. Everyone have the different situations, so you need to go for the tax planning to calculate. Say like, if I have more than 2 or 3 property, what is my actuals or what is the estimate tax efficiencies for yourself? Because in your own the property have a disadvantage and advantage as well. For the company, same thing. So if the company own the property, you have a highest mortgage interest rate, you have the higher maintenance fee, but you have a lower corporation tax. For the individual, you have a lower mortgage interest rate. Yeah, you have the lower maintenance fee, but you have higher income tax rate. For example, 20%, 40%, 45%. All right. So I will suggest again, if anyone really concerned about the property investment, so I would suggest that you probably go with the tax planning, right? So we have offered a full range accounting service. This is our service. So if you have a company in the UK, doesn't matter you own the property or you are trading business, we still provide the company account service. We still provide bookkeeping, we still provide VAT, PAYE service to you all. So if you're a non-UK resident, don't worry, we still have provide the individual tax for you or overseas VAT tax for you. And we provide consultancy, company secretary service, and accounting and taxation consultant service to you all. If anything else that you need from us, please contact us. So this is our email address, and then this is our WhatsApp number, so you can contact us about this. All right, thank you.
All right, thank you, Siuni. I hope that was useful for everyone. If you have any tax-related questions, feel free to reach out to Siuni. I'm sure she will be of good help. Now, let me take you back to the UK property. So I'm just going to give you a brief introduction about who we are. So Select Property, we are UK-based developer. We are one of the leading developers in Manchester, founded in 2004, and we specialize in building different asset classes in their best emerging market. And just as an overview, we have sold over 15,000 property globally, and this is equivalent to £2.81 billion of property. And in terms of investment, we have generated 242 million pounds from our properties to our investors. Our headquarters is in Manchester, and we have global offices across Dubai, Shanghai, and Hong Kong, and a new satellite office in Malaysia. So Select Property. Other than being a property developer, we are also an investment specialist. As part of our recent rebranding, we have promised that when you invest with us, we invest in you. So we are also different from a typical developer in a way that we help you to manage your property investment in the UK, from initial consultation through to exit strategy. We aim to provide seamless support to help to give you as easy and as rewarding investment for you in the UK. So in essence, we develop, we sell, and we manage your property on your behalf. So our headquarters is in Manchester, and as we want to be close to our investors worldwide, we also have offices in Dubai Marina, Shanghai at Jing An Lu, Hong Kong at Sheung Wan, and Malaysia office in Sarawak. So I'm based in Malaysia, and I look after the Southeast Asia region, primarily Singapore, Malaysia, Brunei, Indonesia, and Thailand. Going into our investment brands, this is how we manage our property. So we always believe the power of branding, which is why all our assets are built around our brands. And property brands, this resonate with how we manage our properties. And Vita Student is our purpose-built student accommodation. This is also where we started within the company. And to date, we have 28 Vita students across the UK, and all of them are located very near to a university under the Man Russell Group universities. So they are very popular, always booked out 1 year in advance of the academic year. And City Suites is our service hotel apartment. They are located in central Manchester, a stone throw away from the shopping district, Harvey Nichols and Selfridges. So they are ranked first in Manchester if you go on to the booking.com and TripAdvisor. Affinity Living is our residential brand. So we have completed 4 Affinity Living in central Manchester, and the 5th one is currently under construction in central Birmingham. So this is a brand where to create community-led residential brand, so as to ensure high retaining rebooking rate of the tenants. Prestige Collection is our newly created flagship residential brand, redefining luxury living. I'll be sharing more in the coming slides on this collection. So without further ado, let's move on to UK property market insight, as in what is currently happening in the UK. So if you are thinking to invest in the UK, this is something that you would want to know. So UK has always been the top performing country as compared to other countries in terms of driving strong return. And essentially, this is because in some region of the UK, it is still very undersupply of property for the rental market. And the continuous influx of students has also led to the growth of or increase the demand for the rental property. As you can see here, a rent in the major cities such as Edinburgh, Manchester, Glasgow, Birmingham, this has risen by 10 to 14% in the past 12 months as compared to the UK, including London, UK national average at 10.4%. And so with property, essentially it is always about the fundamental of supply and demand, which is why UK has always been consistently the top performing city in terms of capital gain and year-on-year rental yield. So now let's dive into the UK rental listing. So rental listing is a very good indication to show you how active a current market is. Manchester has consistently been the most active market in the past few years. According to Rightmove, rental listing has fallen in every major UK city due to chronic undersupply, and this is the main reason driving the rents up to a record high. And private rental payments paid by tenants increased by 5.1% in the 12 months to June 2021. If you own a property in central Manchester, you would know how active the current market is and how much the rent has increased from last year to this year. And according to the government website, gov.uk, around 4.9 million households use the private rental sector in the UK. What I like about UK is the rental dynamic. Tenants tend to rent long term, which means they are always on a renewable kind of agreement. So tenants do renew their rental lease every year. So it is a more long-term investment of your property. It also translates as a more sustainable and a long-term passive income for you. And since 2019, rental supply is a third lower and rental prices are over a fifth higher. So you can see from 2019 to 2023, how active the current market is. And if you own any properties overseas or around the world, how this number justify enough for you? Or are they underperforming based on your portfolio? Now let's take a look at Manchester as a city, shall we? So what do you know about Manchester other than the famous football club, Man U and Man City? The first IVF baby was actually born in Manchester in 1978. And also over 70% of the clinical scientists are actually trained in Manchester. So, and if you are familiar with Manchester, you would know that Manchester is the home to the largest broadcasting channel, BBC and ITV in Manchester, in the UK. Media industry is an integral part of Manchester economy and culture. So it plays a role of improving the economy and the population in the Manchester as well. And Manchester, as most of you have known, Manchester has a world-renowned universities. It is also one of the top athletic city for students in the UK. So the universities in Manchester is one of the most respected university worldwide, providing top-notch education. And before we look at the facts of why investing in Manchester, let me share with you, why do you think Manchester is booming? This is actually down to a master plan called Northern Powerhouse. This was announced in 2015 by the UK Prime Minister. The objective is to divert the economy from London to North cities. Manchester has been identified as the core city of this master plan, and which is why you see a lot of the budget support has been allocated to this city. And looking at the numbers, this city has a highest figure in England on the rental growth as of June 2023. And it is also voted the most livable city for the past 11 years. So livability is assessed in the sense of economy, culture, welfare, social health being, so on. So people do want to live in the city, in this city, and that contributes to the rental demand of your property. And as we mentioned earlier, Manchester is also renowned for their education. It actually has the highest second graduate retention rate after London. And in terms of business economy-wise, this is also one of the major factors why Manchester property market is booming. And 80 out of 100 of the FTSE top 100 companies have a headquarters of an operational office branch in Manchester. So this attracts young professionals to work and live in the city. And if you are considering between Manchester and London, I would say, depending on the purpose of your investment, So if it's purely from investment point of view, Manchester has been topping the chart in terms of rental growth at 23.4% as compared to London at 15.8% and UK national average at 11.8%. And foreign investment in the north of England increased from 25.4 billion to 43.7 billion between 2017 and 2021. And if you look at the timeline, 2017 is 2 years after the Northern Powerhouse Master Plans was announced. And you can see this is when the market is growing from Manchester. And the amount of investment was so significant. And over the same period, cash poured into Greater London has dropped by 23% from 43.4 billion to 33.4 billion. Right. Without further ado, let me share with you our current property investment opportunity in Manchester. So this is globally launched on February 14, and it is very well received. We saw over 45% of the development during the pre-launch stage, and 6 months in, we are now over 75% sold. Right, circling back to the power of branding, as I mentioned earlier, we Select Property manage our property by brands, from Affinity Living to Vita Student to City Suites. So One Port Street is our flagship development from this newly created Prestige collection. The reason why this collection is created because we have looked at the Manchester market on a general scale, and demand is still overtaking supply. And if we look deeper into it, there is a demand for more high-end or premium residential property. And this is where Prestige Collection comes into play. And for Prestige Collection, this defines the next level of exquisite living, and we focus on the lifestyle the development can provide for the residents. Now let's look at the development overview. So One Port Street is estimated to complete by Q4 2025. It consists of 477 apartments altogether, a mixture of 1, 2, and 3 bedrooms. It is standing at 32-story high with spectacular views across the city. It will become a landmark destination in the heart of Manchester Creative District. One Port Street is developed and fully managed by us Select Property. It's one of our first flagship development from Prestige Collection. Prices are starting from £325,000. So with property, location is always key. Now let's take a look at the location for One Port Street. So this is where One Port Street is located in the Northern Quarter area. It's about 8 minutes walk to the Manchester Piccadilly train station. This is an intercity link train station where all the trains from other cities coming in from. HS2 will also be coming into this station. And further up here, it's about 7 minutes walk to the shopping district, Harvey Nichols and Selfridges. And on the other side, we have our City Suites 1 and 2. These are located in Chapel Street, very prime location. And along the river, we have 4 our completed Affinity Living residences. These are very well tenanted. Spinningfield will be the CBD area of Manchester. All the companies, Big 4, are here. And on the south of Manchester City Centre, we have our Skyscraper District. This is also known as our Crown Street portfolio. This is a partnership between us and Reneka, and to create 4 towers. The first 2 towers, Elizabeth Tower and Victoria Residence, these are completed and well performed. The Black are finishing in the next few weeks, completing in the next few weeks. 360 will be completing in Q3 2024. So all 4 towers are fully sold out developments. Moving along the way, this is the university area. So a lot of student halls, student accommodation are located here. 2 of our Vita students are also located in this location. So this is Chinatown. Manchester train station is here, as previously mentioned. And most importantly, One Port Street is located within the two master plan, which we will come on later. And just outside of this borderline zone 1, this is Ancott's area, which is the commercial district. Another view of our location, One Port Street, located in the northern quarter area. This is Ancott Commercial District, just right outside Zone 1. Piccadilly train station is here, 8 minutes walk away from our development. And this is the shopping district. It has Selfridges and Harvey Nichols. And Norma is the largest development project in Northwest England. And Spinningfield is a CBD area where the banks, Big Fours are located. And all these are just within 15-minute walking distance. Right, Northern Quarter. Northern Quarter is where One Port Street is located. It's often known as the street art capital of Manchester. It is similar to Brooklyn or West Hollywood or London Shoreditch. There is a lot of street art, wall arts around this area, as well as trendy or quirky bar and restaurants. This is voted as one of the most livable city in Times Out magazine recently. So One Port Street is located here in this area, M1 postcode of Manchester. So very prime location. Right, this is the master plan that we mentioned earlier. HS2, or known as High Speed 2, is the UK's largest master plan. So it is connecting London to Birmingham, and then from Birmingham to Manchester. So when this master plan is complete, it will cut down the traveling time from London to Manchester by half. And it is also estimated to create another 36,000 new jobs. So in essence, this master plan will improve connectivity and drive in population into Manchester and other northern cities. Here is a better view of the master plan. So anything within the red line boundary is part of the HS2 regeneration master plan. It takes up about 20% of the city center area. So you can see how large and major this master plan is. One Port Street is sitting within plot 9. And in plot 1, shaded gray area is the train station, Piccadilly train station. Plot 2 will be the new train station for High Speed 2. And take note of plot 12, that is another new master plan, which I will come on shortly. So plot 12, this is it, Central Retail Park. So what is a Central Retail Park? So this master plan was recently announced in 2020. The aim is to create a net zero carbon commercial district. And it will offer very large commercial spaces for offices. And the UK government civil servant headquarters will also be relocated here. So we are looking at over 1 million square feet of office spaces in this area, attracting large company or multi-tech company. And this is the layout of the master plan. So plot 2 to 4, these are all commercial spaces, and there are also designated plots for residential, hotels, medical centers, and schools. And if you look at plot 2021, this is the marina area. They have stages for concert or performance. And this is similar to Marina Bay Sands of Singapore. And plot 22, that is where One Port Street is located, literally just across the road, 2 minutes away from us. So this master plan, it's aimed to create another 10,000 jobs on top of the new jobs offered by HS2. So this is a very sustainable blueprint on its own. And so imagine when all this comes along, it will add value to your property. So here are some of the CGI images for One Port Street. Over here, this is our rooftop garden, Paganini Lounge at level 7, overlooking Manchester City. This is another view of the Paganini Lounge. Right here is a courtyard garden. Underneath the courtyard garden, there is a swimming pool in the basement. And this is how One Port Street looks in the city center view. So this is the heated pool in the basement with jacuzzi spa. So we have some skylights to draw in natural lights into the basement. And this is how a typical 2-bedroom looks like interiorly, internally. And this is our hotel style grand entrance lobby at the ground floor entrance with a real fire pit. So in terms of apartment prices, 1 bedroom is starting from £325,000. Sizes, you'll be looking at around 500 to 570 square feet. And for 2-bedroom apartments, this is starting from £430,000. Sizes from 700 to 1200 square feet. So all these apartments are designed to cater to the rental market. So these are the optimum sizes for the rental market. So payment plan for differs for 1 and 2-bedroom apartments. For those who are interested, we will take a £5,000 reservation fee plus £495 admin fee. And after that, you'll go into the exchange of contract period with your solicitor, which normally takes about 28 days. And for the initial down payment, for 1 bedroom is 30% down payment, and then the remaining balance 70% minus the 5,000 reservation fee is due on completion in Q4 2025. And for 2-bedroom, your initial down payment is 25%, and then the remaining balance 75% minus £5,000 is due on completion in Q4 2025. Let's take a look at the 5-year investment forecast. So this is based on a 2-bedroom sample apartment. And over the build period, we are forecasting about 12% appreciation and 4.5% year-on-year growth in the next 5 years. As for the rental yield, we are forecasting 4.6% to 5% in the next 5 years. And all in all, this gives us a 5-year rental and return on investment of 64%. Very healthy growth and very positive investment, I would say. So I'm delighted to share with you our lowest summer's payment plan yet. So you can just pay 15% deposit down payment now, and then you pay nothing until next year. In 6 months' time, you pay the next 10 to 15%, and remaining balance is on completion. So limited slots are available. So if you are interested, please reach out to us after this webinar. So it's always good to see some photos, some construction updates. So here are the progress picture for our project One Port Street in Manchester. So site preparation works and remediation works are complete. So you can see that groundworks, excavation works are ongoing on site. The holdings also show a strong presence on Walkgate and Court Streets. So we have actually installed a time-lapse camera on site, and this will capture all the progress of the work on camera. And we will be sharing with you all the construction progress update in our quarterly newsletter. Right. Before we finish off this webinar, let's summarize some of the benefits of One Port Street. So One Port Street is located in an unrivaled location. So there's incredibly limited land supply in the city center in Northern Quarter for new development. And it's the only development in Northern Quarter with a swimming pool and club lounge. It's also one of the first developments in Manchester to balance 5-star quality and warm community. And Manchester is showing very positive rental market performance and future growth protection. And last but not least, Northern Quarter is voted as one of the coolest neighborhood in the Times Out magazine. So that takes us to the end of this webinar. If you are interested, feel free to reach out to us at this email. Thank you, and I'll see you next time.